As the summer comes to an end, the spotlight is on BTC and stablecoins. The first crypto has set a new record for minimal volatility, a feat not seen since January 2017. Bitcoin miners anticipating halving have shifted towards accumulation. Meanwhile, the first Bitcoin ETF was introduced in Europe, and analysts predict that the capitalization of stablecoins will surge to almost $3 trillion in the next 5 years. Hey there, I'm Eleonora, and in this video I will share with you some of the most significant news in the world of crypto. But first, subscribe to our channel, like this video and hit the notification bell below to stay in the know of the latest market situation. Let's get started! Let's start with some hot axmo.com news. Trading on our platform has become even more awesome. You no longer need to worry about fees that reduce your deposit amount, as there is now no commissions for top-ups in dollars, euros, zlotys and pounds sterling. Take advantage of our promotion and easily top up your balance with Visa MasterCard cards without any additional expenses. Another fantastic piece of news for axmo.com traders. Say hello to not 1, not 5, but 10 brand new assets that we've added to our Earn program. Now you can multiply your crypto savings in Solana, Near, Litecoin and other popular cryptos. Start your Earn subscription right now and get up to 8% APY with Near. And if you registered on our platform after 29th June, you have a chance to receive up to 65% annual yield for supplying stablecoins with Earn program. All you need to do is to supply USDC, USDT or DAI worth at least $200. For more information, just click on the link mentioned in the video description. And now let's move on to the latest crypto market news. While the summer is still ongoing, traders are experiencing a vacation of sorts. Trading volumes on centralized cryptocurrency exchanges are still at yearly lows. Decreased trading volumes are associated with low fluctuations in the price of Bitcoin. Currently, its 90-day average annual volatility has dropped to 35%. This indicates that its price can be considered stable. According to ARK Invest data, the last time the coin reached a similar value was back in 2017. However, on August 17th, the price of Bitcoin began to decline, and on the 18th, it sharply dropped to below $25,500, which came as a complete surprise. One of the main reasons for this was the sale of bitcoins by Elon Musk's company SpaceX for over $370 million. It's no secret that Musk's tweets often lead to pumps and dumps of certain crypto assets. When it comes to Bitcoin mining, it's becoming more challenging again. On August 9th, as a result of the latest recalculation, the mining difficulty increased by exactly 0.12%, currently surpassing 52 trillion hashes. Data analyzed by the Bitfinex team indicates that miners have entered an accumulation phase in anticipation of the halving event scheduled for April 2024. Over the past few weeks, they have been gradually increasing their reserves, adding over 4,000 BTC in the last 48 days. While miners are increasing their reserves, institutional investors are cautious. Large holders are not rushing to move their coins. Those who haven't done so for at least half a year now hold more than 40 million BTC in their wallets. This is a new record equivalent to 75% of the total circulating supply. Furthermore, Bitcoin funds have been recording significant outflows of cryptocurrency for 3 consecutive weeks. From July 28th to August 4th, an outflow of over $111 million was recorded. This is the highest figure since March 2023, when US regulators began tightening control over the industry. The negative trend only changed during the period from August 5th to 11th, when Analysts registered an inflow of $27 million. It's worth noting that the number of full Bitcoin holders is increasing steadily. The historical maximum has been restored, surpassing 1 million holders with a balance of more than 1 BTC. Additionally, there are now over 12 million addresses holding more than 1/100th of Bitcoin. And now, perhaps the hottest piece of Bitcoin news. The British company Jacoby Asset Management has introduced the first Bitcoin ETF. The instrument has been listed on the Dutch stock exchange under the ticker Bitcoin. It is reported that the ETF incorporates a solution for certifying renewable energy sources, allowing institutional investors to access the benefits of Bitcoin while remaining eco-friendly. Currently, apart from Europe, funds based on a spot version of digital gold are also available for trading in Canada and Brazil. Meanwhile, stablecoins are becoming more and more a part of our daily lives. According to a report by broker Bernstein, over the next 5 years, their total capitalization will grow from the current $125 billion to nearly $3 trillion. The company's analysts are convinced that integration with various platforms will serve as the driving force of growth for digital assets pegged to the US dollar. However, some experts are rather skeptical about such 5-year projections. They believe that making long-term forecasts for the cryptocurrency market is quite challenging.
Trying to predict crypto in 5 years, anything in crypto in 5 years is pretty, I mean, look, 5 years ago, where were we? 2018? Middle of crypto winter, post that first $20,000 bubble, and we honestly wouldn't have guessed we were here. I'm not even sure I would say this is higher or lower than what some of the more enthusiastic people would have said. I think Tom Lee probably had Bitcoin at $25,000, though he didn't really explain why.
In the meantime, Paolo Ardoina, the Chief Technology Officer of Tether, has announced a mobile application for international payments. According to him, the new service is aimed at operations between companies and regular users using USDT and Tether Gold. Payment giant PayPal has also joined the trend and launched its own stablecoin pegged to the US dollar. The asset will be used for transfers and purchases. Thanks to the fact that the new token operates on the Ethereum blockchain, JP Morgan analysts expect that its launch will increase the number of users on the second most popular network. Due to increasing demand, regulators have also begun paying more attention to stablecoins. For instance, the financial regulator of Singapore has announced the complexion of developing rules for stablecoins. These rules will apply to assets issued in the Asian Republic, pegged to the Singapore dollar and any currency of the group of 10 countries. Apart from Singapore, the United Kingdom also enacted a stablecoin regulation law back in June of this year. However, specific rules are not yet in place. Meanwhile, public consultation regarding these assets are taking place in Hong Kong. It is planned that the regulations will be operational by next year. Developers of the Telegram bot wallet built on the open network have announced the launch of the beta version of the Tone-based cryptocurrency wallet. The seamless integration with the wallet will allow projects to provide their users with the capability to store, transfer, and trade assets directly within Telegram. Currently, developers and crypto enthusiasts who wish to integrate wallet features into their applications can apply to participate in the beta testing phase. The Litecoin network is buzzing with activity. It has already processed 34 million transactions this year, averaging over 1 million transactions per week. Furthermore, during the second quarter, the amount of transactions on the Cardano network increased by nearly 50%. The updates that were released earlier this year attracted both users and developers to the network. Such indicators typically precede cryptocurrency price increases as they signal growing demand and asset usage. So let's keep an eye out of some green charts. Eleonora, but what's going on with Litecoin's halving, you might ask? As expected, the coin's price dropped following the blocked reward reduction. In just over 48 hours, it dipped by 12%, settling at $83 before continuing its descent. But long-term holders were prepared for this. Indeed, according to Into the Block's data, they were actively transacting during the price uptick, possibly selling their coins during the rally. Conversely, during the asset's decline, short-term holders were more active, getting rid of LTC to minimize their losses. And finally, a bit of pop culture news. Crypto takes the spotlight in the latest season of Futurama. According to the plot, Professor Farnsworth invests all of his savings into Bitcoin, but the crypto's value drops, forcing him to sell the coins at a low price. However, after the fall, a sudden rise occurs, triggering a new Bitcoin fever. To pay off his debts, the professor declines to engage in the mining of a rare metal, thallium, which is necessary for cheating chips for mining equipment. For this, he travels to Dodge City.
The virtual money is soaring once again, leading to a high-tech gold rush.
Prospectors are heading west, where cheap, filthy electricity beckons the desperate.
This comical episode once again reminds us of the golden rule of investing: not to put all of money, especially savings, into a single asset. And now that's all for today. And don't forget to subscribe to our channel, like this video, and click the notification bell below.